Hey guys, welcome back. In today's video, we are talking about AMC deploying capital for a secret move, the 110% ownership, how the margin call is closed, and many more in this video. Firstly, we're taking a look at this. Recently, we talked about AMC selling its HYMC stake. Now, we talked about how they still hold the warrant, so they're still able to make money if HYMC is to go further up, but they just won't make as much money because they sold off their shares. Now, they talked about deploying the capital, they talked about having cash on hand, and you can see Adam told us to redeploy the capital towards substantial opportunities within our core theatrical exhibition business. New Paramount looks to unload its national amusement theatre screens in US, UK, and SA, or AMC buy these national amusement theatres. So we've known how AMC has been extremely strong in making investments in their own infrastructures. Yes, they've of course made other investments like we've seen with HYMC, which is doing well, but we know that the majority of the investments they have done has been on their infrastructures. We talked about premium screens, we talked about closing down the cinemas that aren't doing well and then opening up at areas that are doing well and refurbishing. So we talked about a lot in terms of reinvesting into their infrastructure. Now, with this, with the fact they are freeing up cash and with this talk of unloading the national amusement theaters, what we could be looking at is how AMC can obviously be getting into this. Now, like we've talked about, AMC needs to do these things in order to increase their revenue, in order to make their financial sheets look better, because that's ultimately what's going to keep the business alive. We've already seen how they've made examples of this. And so if these turns out to be the good investments and potentially what AMC wants to go into, then this could be what we are looking at. And if you want to understand how they can do this, 759 screens equals 72 theaters in 4 countries. If AMC redeployed cash from HYMC to buy only the US theaters in a sweetheart deal from Paramount, the 21 theaters could be sold for 100 to 150 million or less, depending on Paramount's cash raise for a competing Warner Brother deal. And so this is the potential that we could be looking at. Now, of course, it gets a lot more complex than this because these are all assumptions. We don't know for sure how much they can obviously get it for. You have to realize AMC still has 380 million cash on hand. By freeing up cash, by making these moves, it just feels like they want to do something. We've talked about this already. The fact that they have already got 380 million cash on hand, yet they're still selling these shares, looks like they want to do something big. And this could potentially be one of them. But also, there's something else that I think they may be getting into, which is the fact that they go into financing films, and that is the Jan/February secret. I've wanted them to get into that for a while. Imagine they put 10 mil into a 20 million budget, and the film does 50 mil, 15 million profit. Movie could do 100 million, etc. Any movies should be profitable with apes backing it. So there's obviously a lot to talk about here. Now, firstly, I'm not someone who's a professional when it comes to understanding these movies, so I'm not sure if it worked exactly like here. You know, of course, when you talk about a normal investment, if you were to put 10 mil into a 20 million budget and it does 50, you are making 50 mil or 15 mil. But of course, it may be a lot different when it comes to movies. If anyone has any ideas, feel free to obviously comment down below. But one thing is for sure is that these are some investments that they can make which would generate them massive returns. Now, the reason why I said this is in our previous video, we talked about how we've been seeing a lot of movies doing extremely well. We've seen how Zootopia 2 has done exceptionally well, and the fact that its biggest market was actually in China. Now, the reason why I say this is because we're talking about more and more opportunities when it comes to movies. And we've seen how Adam Aaron has been talking about using AI to then make movies more welcoming in foreign countries, whether it's foreign films within US or US films within foreign countries. They want to use AI to make it more appealing and have more of an incentive for people to watch. And so what we've known is that film distribution is something that could be massive. And so if it looks like AMC wants to expand the AMC film distribution business and wants to go more into it because they've seen how Zootopia 2 and all of these other movies have done exceptionally well. Maybe Zootopia 2 is too big of an example, but nevertheless, it doesn't take away from the fact that the opportunities are still there, that the potential are still there. Is looking like something that AMC wants to do. And so this is within their boundary. This is within their industry. AMC has a bigger likelihood of course, making money from making the movie than it does making these investments. It's not to say that these investments are good. Evidently they are, But for a company within the theater industry, it would make sense for them to also go into film distribution, given the success they've had with, of course, we talked about with Taylor Swift and all of these other artists. These are taking a different route, but it is still something that I think that could be extremely profitable. And so if AMC were to distribute it well and were to go into this, we are going to be looking at something that could be massive. And that's what I think is their secret move. Now, these are all up in the air right now. Of course, we know nothing for certain, but it is something that I obviously want to look out for. And the big reason for this is because of the potential. It's because of how the market is seeing this right now. So recently, we've seen Netflix talking about their bid for Warner Brothers. And you can see Netflix stock falls 3% to its lowest level since April 2025 after Paramount launches a hostile bid for Warner Brothers. Netflix is now down 28% from its record high seen just 6 months ago. Paramount's offers value Warner Brothers is at $108 billion. So firstly, when we talk about film distribution, this is how big it can get. Now, there are more to be factored into this, but this is what we're looking at when we talk about market caps for some of these film distribution companies. Then it's talking about, firstly, Netflix already wants to get into this. So this is coming a long way from people who have said how Netflix is completely destroying the film industry to then Netflix going into the film industry. And so that's already the big change. And then it's the fact that when Netflix fails to bid for it, as they see Paramount obviously go for this surprise bid, they are seeing their stock price fall. So this is just showing how the market is viewing the film industry as extremely crucial, as extremely big right now. And so this is why I was talking about in terms of how if AMC were to get into this, this is something that is going to be massive. And this is why we talked about how Netflix wanted to do collaborations with AMC, and we're seeing how potential, things that are going there, the potential deals and partnerships. And so if you want to look at here, Paramount launched an unsolicited $108 billion all cash bid, valuing the shares at $30 each, $18 billion more in cash than Netflix mixed cash stock offer. And so the talk about this is that going to what we've said, if something were to happen and we're seeing a bigger deal, then we could of course be looking at how there are more opportunities available. But from here, you can already see if people are willing to be fighting for this, if people are willing to be paying hundreds of billions of dollars for this, you need to realize that the potential market cap we can get. So if AMC, the biggest industry, the biggest movie company within the industry, and it expands its business into the film distribution as well to align with the likes of wherever it's Disney, Paramount, all of these guys, then what we could be looking at is how the market cap will go up exponentially. Furthermore, you can see after all of this, we were supposed to fold, we were supposed to accept the $2 AMC lie and disappear quietly, but retail didn't break. We got louder, we got smarter, we started exposing the manipulation as it happened live in real time. So one of the biggest things I love about this community is how we're always sharing things. And just like we talked about with earlier, we talked about biotech giving us all of these details. You can see how we're linking everything together. Apes have learned a lot throughout this whole thing. We've seen how we can actually understand everything that's going on. We talk about how the future projections, we talked about how some certain things that could happen. We have seen apes talk about it a month, a year, 2 years prior, and then it's actually happened. So this is talking about how we are right on the majority of things. Not to say we're perfect, but a lot of the things that we have talked about have come true. And so this is the power of apes. And you have to realize that AMC right now is that debt has been lower than it has been in 6+ years. Paramount may win Warner Bros. Bid and vow to increase film count and support theatrical windows, which is another big boost to the box office, which then in turn boosts AMC as well. Sale of about half of HYMC brings in $24 million while holding the rest to run. Q4 will be positive cash flows. Rate cuts will begin showing, and when we report Q4, and one more comes this week in all likelihood. And we talked about, firstly, Avatar film coming out. That's going to be something that's going to be major. Just like we talked about, potential with the Paramount, we could be seeing more movies getting released, which in turn benefits AMC as well. The Q4 is going to be showing exceptionally well for AMC as well. So many things that are happening. And then it's when you see the manipulation. IMAX, $38 per share is up by 6.8%. Cinemark, $23 is up by 6.8%. AMC is only up by 1.4%. this makes 0 sense. And the reason why IMAX and Cinemark is going up is because they're benefiting from the box office. Now, AMC should also benefit from the box office, especially with how well they've been doing, yet we don't see that reflect in the stock, and you obviously understand why. Firstly, we are back above the 30-day moving average of dark pool abuse, and this is why we've seen why Cinemark, why IMAX is going up and AMC is not. It's not because we are not benefiting. It's not because we are not performing within this box office. Of course we are. It's the fact that buy orders being taken away. Anyone of you, feel free to take a look at the comparison between the 30-day average of dark pool for AMC against IMAX and Cinemark, and then you will see the reason why. Another big thing is obviously because of with these synthetic shares. You can see with Kavana, what we're looking at for institutions is 111%. Now, this isn't the first time we've seen this. We've seen this with Cinemark as well, where institutions hold 120% ownership of Cinemark. And we talked about how that is already exposing the synthetic shares. And recently, what we looked at is how supposedly institutions now own over 50% of AMC, which we all know is not the case. But the only way for that to be possible is that if they're accounting for all of the synthetic shares created and that's being flooded into the system. And so when we already see this mistake happen again, when we see these glitches happening again, we know that something's obviously happening within the system. And this is just an example of it. Furthermore, and take a look at this, Virtue just got caught robbing retail investors in a court of law. The SEC won the lawsuit, but they let Virtue off with a slap on the wrist. So once again, what we've seen is how, whilst the SEC is making an example, is calling these guys out for manipulation, they're not giving them a severe consequence for them to stop doing it. Now, some of the things that has happened is that Virtue claimed they had strict information barriers between their custom orders, execution business, and their prop trading desk, which wasn't the case. For 15 straight months, they left the database wide open that contained every institutional order they executed. Order patterns, trade sizes, customer IDs, all of it. And this is why we see how these firms are able to make money, because they got access to the market makers, which they then know exactly what orders to take. And with this, despite the fact they're doing this, we're still seeing Virtue's debt going up. We're still seeing Virtue's loans going up. And so it really begs the question of what's actually going on and why do they need to expose the data when their financial sheet is showing so bad? Is there a correlation? Now, let's talk about the margin calls happening. And what we're looking at this is example. Now, I do want to give my own take onto this and I will show you guys an example. But you can see here, Bitcoin sitting at 91K with a 1 billion short liquidation line mine waiting at 93K is wild enough. However, if Bitcoin pops, shorts vaporize, collateral evaporates, margin calls starts singing. And so this is something we talked about. Now, my take on this is that it's not necessarily in terms of Bitcoin going up and then the shorts vaporize. What we have seen in the past is talking about how collaterals is being used. And I want to give you guys this example, the hypothetical total return swap basket strategy, where you can see in the basket, there are different stocks. Some are long, like you guys can see with Nvidia, and then some are short, like you guys can see with AMC. Now, the whole concept of this is that when the long stocks are going up, they have the collaterals, they have then the value to then further short these stocks like GameStop, like AMC. And then that's why we talked about when we then do see these Nvidia stocks, when we do see these long stocks actually drop in value, the collateral evaporates and then these short stocks actually start squeezing. And so in this case, this person is obviously talking about if Bitcoin's going up, but very likely is that they are actually using Bitcoin as longs. And so if Bitcoin were to drop in value, we could be seeing shorts evaporate. But now this is still up for debate because some firms may be using Bitcoin shorts as collaterals, especially given the recent market circumstances. But more than likely it is long. There is that possibility it is short. And if that is the case, then what he's saying here is obviously what we talked about as well in terms of the examples being given. But then when you look at something else, when you talk about the general market, you are already seeing collateral stress. So the last time funding stress and collateral stress lit up together like this was 2007 and 2008. So already hearing that, you should see how severe this situation is. You should understand why this is a serious matter. And just like we talked about, when we see a collateral stress, when we see a funding stress, we're going to be looking at these collaterals dropping. We're going to be looking at these longs, we're going to be looking at these shorts actually getting squeezed. So we're going to see longs get closed out, and then we're going to see shorts start squeezing. A big thing to show this is that what we're looking at is how today's Japan 20-year bond hit 2.94%. And we've already talked about the yen carry trade, but furthermore, it could be that they're forcing Japan to be selling the US bond, which then the rest of the world will follow, and we're going to be seeing a massive sink within the market. When we take a look at the reverse repo, 1.7 billion still not going to zero. Like we've said, that isn't a serious issue. The very fact we are seeing it at a low amount, the very fact we are seeing a struggle within the liquidity system within these institutions, that itself is already sounding the alarms for margin calls for the potential short squeeze that is about to happen. And if you want to take a look at the technical analysis, what we're looking at is banks falling as well. Now, technical analysis isn't going to be the thing that causes the market crash, of course. However, technical analysis does show the sentiment within the market. It does show the price action and what these investors are feeling. So if we are looking at how potential investors actually want to sell the stocks, and then you mix that up with the factors we've just been talking about, you start to see why we say that the market is going to fall, why we see the margin call is going to happen. And if you want to take a look at the T+60 for GME as well, feel free to do so, talking about further stress within the locates, and that's going to force these short sellers to be in the bad position. As always, this is financial advice, so do take a while to go and sell. Make sure you do your own due diligence and research, and I'll catch you guys next time.